Alright, in this video I'm going to answer the question, is Texas Instruments stock a buy? You're going to get the answer by the end of the video, so stay tuned. Let's get right into it. I'm going to use my simplified 6-step framework for analysis. The first step in my framework looks at the customer value, and Texas Instruments sells analog semiconductor chips and embedded processors that are used in consumer electronics, cars, industrial markets, several industries like that. And if we look at the net promoter score of 9 and we look at the scale down here, it's got a good net promoter score. This takes a measure of how likely a customer is to recommend the product to a friend or colleague, and a score of 9 is good, not great. Revenue expanded from 12.8 billion in 2012 to 18.3 billion in 2021. So evidence of good customer value there. Otherwise, customers wouldn't keep coming back to TI for its products. The next step in my framework looks at unit economics, and the company earned a gross profit margin of 62.7% in the last decade and an operating profit margin of 40%. These are excellent, excellent margins, and perhaps the reason for that is the company holds 43,000 patents worldwide and makes technology that's difficult to replicate. It operates in a total addressable market, according to Statista, that generated 555 billion in sales in 2021, and total addressable market is one of the more important steps in my framework for analysis because it measures the ceiling a company has. How far can it keep growing without reaching its ceiling of growth? The next step in my framework looks at competition, and the end demand for semiconductor chips continues to soar. I'm sure all of you have heard of the semiconductor chip shortages worldwide. Consumer electronics, cars, industrial machines are all getting infused with more technology than ever before. 5G phones use a lot more semiconductor chips than 4G phones, and EV cars use a lot more semiconductor chips than regular cars, and so on. And you can go across the board, and this is great news for investors in TI stock. So that's giving semiconductor companies pricing power and relieving competition based on price. Valuation, if we look at Texas Instruments based on its price to earnings ratio of 18.58, it's almost as low as it's been going back to before 2014. But if we look at its price to free cash flow of 27.8, it's almost as high as it's been going back to 2014. So if we take a combination of the two, we can say the stock is fairly priced, right? It's inexpensive looking at PE, but it looks expensive based on price to free cash flow. So if we look at both together, it looks to be fairly priced. And the final step in my framework looks at risks. And near term, some industry participants have elevated inventories that they'll need to work through, which could lead to discounting and lower prices. This is a risk for TI in the near term. TI itself expects growth to be flat over the next several quarters as the industry works through some excess supply. So revenue could be flat or it could decrease. Earnings per share could be flat or decrease over the next few quarters, and that's a risk for TI stock investors. Finally, now that I've looked at each step in the framework, let's give it a grade in each one. Customer value, I gave them a B. Unit economics, I gave them an A plus here. Perhaps one of the best companies in terms of unit economics that I follow, and I follow over 100 companies. Texas Instruments, it's near the top of the companies that I follow here. A plus in that regard. Total addressable market, I gave them an A plus. Massive and growing market. Competition, I gave them an A minus. Risks, I gave them a B plus because of the near-term pressure from elevated inventories. And valuations, they earned a B because of one metric was expensive, the other one was inexpensive. Overall, I gave them a B. So now it's almost time to answer the question if the stock is a buy. But before I do that, I'd like to recommend that you subscribe to my channel, because you're going to get updates on this recommendation that I'm going to give here. The recommendation is going to change over time. You're going to want to be subscribed so that you can get those updates. You're not going to want to miss out on those. So go ahead and hit that subscribe button right now while I'm switching over to the slide to see if the stock is a buy. Yes, it is. The stock is a buy. Excellent operating profit margins, unit economics, as well as a relatively inexpensive or fair valuation coupled with a massive market opportunity sways me to recommend the stock as a buy. Okay, so there you have it. Texas Instruments stock is a buy. That's all I've got for this installment. And if you're subscribed, I'll see you next time for the next installment of Is This Stock a Buy? I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.